Well, hi there folks, it's Matt Hayson here looking at this week's property market. Now, as expected, the RBA has met during the week and left the cash rate on hold at the record 12-year high of 4.35%. However, some of the commentary from the RBA is a little less hawkish from the latest meeting, and that's spurred on some confidence amongst those that sit in the camp that the next move from the RBA will be to cut the cash rate later this year. However, experts do remain divided about what the next move will be from the RBA, with the latest Finders RBA cash rate survey amongst 41 financial experts suggesting that 1 in 4 still hold the view that the RBA will not cut the cash rate until 2025. Now, as I've reported over the last several weeks, CBA and Westpac are firmly in the camp that the next move will be to cut the cash rate in September, October and November. However, companies such as JP Morgan and HSBC hold the view that with sticky inflation, that the RBA will not cut the cash rate until early 2025. Also this week is Westpac's Home Ownership Intention Survey, which has produced some very interesting results. Now, this survey, it's been around since 2019, and during that time we've seen some incredible highs and lows for the property sector. But very telling in the latest survey is 60% of Australians intend to buy a property in the next 5 years. Now, this is surpassing the previous high of 53.5% that was achieved in mid-2021. At that point, the market was absolutely booming. Two key demographics which are pushing this survey forward is coming from upgraders. So those people that currently own a home are looking for more space and have equity in their property and looking to unlock that as they move up the property ladder. And then we've got the investor market, which is almost the perfect storm, and they're expected to surge back into the market over the next 6 months. And we're seeing this record low supply, record low vacancy, surging rents, a bit of capital appreciation and high migration, which is going to underpin demand for rental properties over the next 5 to 10 years and beyond. But very interestingly, and looking at the winter period for selling, it's just 10% of Australians intend to sell their property over the next 6 months. So with all of that latest data, we're now going to read the property tea leaves and give you our forecasting and view for how the autumn and winter market could perform. We're already starting to see listings tighten up over the last several weeks as we move into this very disrupted period with Easter, followed by school holidays and Anzac Day, which could be playing a role. But always and typically through winter, we tend to see fewer homes available. Now, if this low supply does continue, it's likely to underpin and support property values moving forward in the winter months. But any price gains that we're likely to see, in our view, will be resigned to the A-grade quality property in any particular market, whereas the rest of what's available is likely to see a more balanced, even negotiation between buyers and sellers. So in terms of prices, we don't believe there's any significant gains, but neither any big losses as well. It's going to be a fairly balanced market as we move through the winter months. So that's our view on things. We've got some amazing properties being listed this week. Our entire team is so excited to see you out and about. Thanks for watching, and I'll catch you all next week.